What makes a good multifamily real estate investment market? How do you choose one market over the other one? And what actually drives a market forward? What causes it to grow? That's exactly what we're talking about in today's video. So make sure you hit the subscribe button right now so you don't miss more videos about building wealth through multifamily real estate. I'm Seth Ferguson. Let's get right into it and talk about multifamily market selection. It's one thing to listen to hype and kind of go with the flow. It's a totally different thing to actually dig into the numbers, dig into the data, and really find the true best market to invest in. And there are a number of different drivers that I look at and other successful investors look at when we're choosing a market to go into. And it's all about the numbers, and it follows a market growth cycle. And that's what we're going to be covering in today's video. So we'll be starting at the very bottom of the growth cycle and working our way up. So let me draw an arrow right here, and we'll call it the market drivers. And of course, my writing is already out the window and we just started the video. That is pretty typical for my writing. So anyways, starting at the bottom. So the bottom of the market growth cycle, and we'll be working our way up. Very first thing that we're looking for is GDP growth. So what's going to happen is once the economy starts growing, right? Once the GDP starts ticking up, something else happens. Business is able to expand, right? Economy is growing, so now we have job growth or job opportunities, right? Because once the economy grows, businesses will grow and they need to hire people, right? They're expanding. So job growth. What happens when there are more jobs available? Well, people will actually move into an area. They will look for jobs. Look at what's happening right now in the United States, right? We've got on the West Coast and the East Coast, people are fleeing the coast and moving to where the jobs are, right? The southeastern US, that's where the job growth is happening. There is so much opportunity in those states. So GDP starts growing, economy expands. That allows business to expand as well and hire people, offer more jobs to people so they can take advantage of the growing market. And that in turn, like I said, leads to population growth. I'll just draw an arrow, population growth, right? Because people will move to where the good jobs are. So you've got GDP growing, market expands. That allows business to expand, hire more people, and people will actually move to where the jobs are. Now, what does this do, right? So we've got the current population in the area, we've got the current multifamily unit supply, but now we have a new influx of population, right? Because people are moving in to where the jobs are because they want to be gainfully employed. This increases the demand for the current rental product. So I'll just say demand increase or demand. Let's do an arrow. If we had a balanced market before, so we had X number of units available and X number of tenants, and it equaled out, we had a balanced market, that's one thing. But now we have more people moving in. So now we have the number of units available, but now we have more people competing for the same number of units. So demand goes up. What does this do? It actually pushes vacancy down, or occupancy goes up. We have the same number of units, but more people moving into the area. That's driving down vacancy, increasing occupancy, all because of the GDP growth, the economy expanding. That led to more jobs. More people are moving into the area for those jobs. That's increasing the demand, which in turn is going to decrease vacancy. Now, what happens when we have more people competing for the same rental product? If vacancy goes down, there's more competition. Well, rents will then go up, right? It's all about supply and demand. So if we have more demand for the same product, prices will then go up. And if you are a longtime viewer of the channel, you know that as rents go up, that means the NOI of the property, how we value multifamily assets, the NOI is also going to go up. What is that going to do? Well, that's actually going to put, here, I will expand my arrow here. So values, so property values will then increase because we have more net operating income because of the supply pressure, the upwards pressure on rents. That's going to raise the value of the asset. And also when we have more demand, more population moving into the area, it's becoming a hot market. What also happens to cap rates? They compress or they will also go down. So we have a higher NOI, more compressed cap rates. That's actually going to really skyrocket values up, right? Because investors are willing to pay more for every dollar of NOI produced when we have a lower cap rate. And I'll put a link right up here to a video I did explaining all about how commercial multifamily real estate is valued. It's called the income approach. I'll cover that in that video more in depth. But this is how a market is driven upwards. This is how rents increase. Notice how the rent increase is at the end of the spectrum. It all starts with GDP growth, leading to job creation. Then people move to get those jobs. That increases demand, and then that will decrease vacancy, increase occupancy. Rents will then increase because of that increased demand and that competition, and that's going to, at the end, drive values up because NOI improves, cap rates will compress, and that is the market growth cycle. So what are you looking at as a multifamily real estate investor? You're looking at all of these things. You're looking at GDP growth. That's one of the first things we look for. We look for that on a state and province level, and then also as an MSA level. Then we're looking at job numbers, either quarterly, biannually, annually. We're looking for all the data to see the trends. We're also looking for population growth. What is the overall trend over the past 2, 3, 5, 10, 15 years? Where are we heading? And also, who makes up this population? What are the demographics? What are the age groups? Is there a trend in terms of where the age is skewing? Because that's going to impact the types of amenities we offer to prospective tenants. It's also going to impact our advertising. All of that stuff will change. So we need to know who's moving to the area and how many of them. And then obviously we're tracking vacancy rates. That's really important. Rents, household income to support those rents, and obviously the values up top. But most of the research is done in GDP growth, job growth, population, and vacancy rates, and plus household income in those demographics. These are the key numbers you have to focus on when choosing a new real estate market, because GDP and job creation, that's going to start the whole growth phase right here, and the pushed up values, the rents, they come at the end. So this is the market growth cycle. These are the true market drivers of what's going to push a market forward. If you are looking for a new real estate market to invest in, if you're looking at several, I suggest you look at 5, then narrow that down to 2 by following this process right here and focusing on these key numbers. If you're a multifamily real estate investor, I want to invite you to the Multifamily Conference. We just announced our 2 huge, ridiculously insane keynote speakers for 2023. Go to multifamilyconference.ca. Early bird tickets are on sale, but it ends pretty quick. So make sure you check it out there. And if you like this video, hit the like button, leave a comment. It really helps out the channel. Much appreciated. And until next time, happy investing.